Hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this video, we're going to talk about how you can minimize potential clawback on your old age security benefits. We're going to talk about 5 strategies. Now, if you're new to our channel, make sure you hit the subscribe button. We're posting content all the time, drawing on over 30 years of experience helping clients navigate the retirement transition. And while you're at it, make sure you hit the alert bell so you're notified when the content is uploaded. Well, when it comes to our retirement, I think one issue that just drives people crazy is when they get to age 65 and they begin to take their old age security benefits, they find out that they're subject to clawback. It just can be very infuriating. So we're going to talk about some strategies for reducing the potential of clawback in your situation. So if you look at clawback limits, it's basically net income of about $77,580 that gets adjusted over time. But if you're looking from a planning perspective, what dollar amount begins to trigger clawback, it's a net income of $77,580. Now, to reduce clawback, we already know, and many of you probably know, that when you're retired, there's a lot of opportunities to income split. And so a number of years ago, the government put in place much more liberal income splitting opportunities for pensions. And for the vast majority of Canadians, that has helped to keep them from getting into the clawback zone for their old age security benefits. But there are still many people who are subject to clawback, and there's some strategies that they can begin employing before they get to age 65 to reduce the potential of clawback. So let's take a look at the 5 strategies. Now, the first strategy is make sure you're using a spousal RRSP plan. So when the more liberal income splitting opportunities came up a number of years ago, it was felt by, I think, some people that spousal RRSPs were redundant. They really weren't needed anymore. But the reality is, if you're trying to increase the amount of income that you can split with a spouse to generate the after-tax cash flow you need as a family, but still do it tax effectively, and to make sure you're not getting hit by clawback, the spousal RRSP contributions may still be very appropriate for you. So don't ignore those clawbacks. Now, one of the things you're going to see when I go through the strategies is the importance of forecasting. So forecasting out your cash flow and your taxable income into the future can be very helpful with some of these strategies. And the spousal RRSP one is an example. Okay, so strategy number 2 is invest in corporate class investments. You find with a lot of people who get hit by clawback, they're getting other sources of income in addition to their regular pensions, as an example. So it could be money coming from their open portfolio. They're getting dividends, interest income, realized capital gains, and so that pumps them into a level where clawback might get triggered. To reduce taxable income in your open portfolio, consider corporate class investment funds. They have a way of structuring the portfolio so there's a deferral of income or converting what is normally dividend or interest income to more capital gains income. So we won't talk about that in detail today, but just note to self, explore corporate class investment funds for your open portfolio to reduce taxable income. Strategy number 3 is really maximizing tax-free savings accounts. Pretty straightforward. But again, one of the ways you can reduce taxable income on your open portfolio, and particularly if you start this early enough, is through tax-free savings accounts. So of course, all the income that's generated is growing on a tax-free basis, and when you need to take money out, there's no disposition for tax purposes. So very powerful tool. Again, note to self, make sure you're maximizing on your TFSAs. Now, if you don't have the cash to do it, but you have been building up non-registered assets, you can do an in-kind transfer from your open portfolio to your TFSA and begin sheltering that money from tax once the money's in the tax-free savings account. Strategy number 4, make early RRSP withdrawals. So early withdrawals from your registered accounts. Now this one especially is reliant on forecasting into the future. So when you look at your income into the future, you might see that you've got your, let's say your employer-sponsored pension plans, your investment assets generating income, maybe your RRSP assets or RIF account. And then you add on to that eventually your Canada pension plan and your old age security, and you're seeing a stepping up of income, and it gets you in trouble from a clawback standpoint. So for some clients, it may make sense to begin drawing money on your registered accounts early and paying the tax as a way of preempting getting hit with clawbacks down the road. And the only way you can get clarity on that is really have your financial advisor or financial planner or income specialist take a look at the forecast and see if there's some opportunities for you to exploit on the tax schedules before you hit age 65. Strategy number 5, realize capital gains. So again, with this strategy, you'll see people who sell a rental property or a cottage, or they might have stocks that they are forced to sell for various reasons or want to sell, and they don't connect the dots that those dispositions for tax purposes, the capital gains, could impact their old age security benefits, and they might be subject to clawback. So one of the things you'll want to do is take a look at those sales. Are there asset sales you think you're going to be doing anyway? Maybe do some of those asset sales prior to 65 so you don't get into the clawback zone on your portfolio and your income. So that's strategy number 5. Well, it's my hope that you found the content helpful. These 5 strategies are important to look at in the context of an overall plan and look into the future. We've got a link in the notes to this video that takes you to our retirement planning resource page, and there's some sample reports there about our forecasting, and those forecasting reports really give good guidance to people as to whether they're potentially going to be hit by clawback, and if so, what strategies they can do early to minimize that taking place in their financial planning. So again, if you're not a subscriber, hit the subscribe button and alert bell so you get future content alerts. And if you have any questions around retirement planning generally, make sure you go to our website, follow the links to the notes for this video, and you'll get some great resources. Anyway, wishing you all the best in both your retirement income planning and wealth planning journey. You take care. Bye-bye.